Hi, everyone. This is Chin May, and I'm here with Ken Horne from AN Venture Partners. Ken, how's it going?
Going well. Thanks for having me today.
Absolutely. Thanks for being here. And so, Ken, can you introduce yourself and tell us a little bit more about?
Sure. And Ventures was launched, first fund was launched this year, actually. We're a $200 million therapeutics focused cross border fund. We specialize in sourcing opportunities, science from Japan, and then taking advantage of the US venture ecosystem because the Japanese venture ecosystem is still pretty immature. We try and build bridges there. So all of our companies are Delaware C Corps on top. We're really trying to syndicate with US investors. And basically, we want to be the conduit and the go to partner for US venture funds who want to do business in Japan because we know the market there and the scientists there better than anybody else. And on the flip side, for Japanese scientists, that's kind of the pitch we make is like, hey, you want to build a global company, you want to work with like blue chip US investors, like, we think we're your best bet in order to build those bridges. Besides that, we do invest globally, so we're not Japan only, and that allows us to diversify our portfolio and participate in some of our potential syndicate members' opportunities as well.
That's great. That's great. That's helpful. And I think you mentioned $200 million fund. I think it's one of the only funds this year that's closed on over 150 million right this year. So congrats on that. That's huge news. Can you speak to some of the? I guess would you mind at a high level kind of talking to some of your portfolio companies today?
Sure, we're about two-thirds. We've done 10 investments. Not all of them are public yet, but most of them are on our website. Um, we have a relationship with Arch Venture Partners, although we're independent, and we don't have any exclusivity or anything or vice versa. But, we have inherited some of their DNA, so to speak. And generally our investment thesis is to go big like all the time. Now we're a $200 million fund. We're not a $3 billion fund. So go big for us looks a little different than Arch. But when we look at Japan, we're looking for opportunities that if this works, it's going to change the way that area of medicine is practiced. Right? Those are the opportunities that we're looking for. Besides that sort of unifying guideline, small molecule, large molecules, peptide, cardiovascular, gene editing, obesity, we'll do any sector, any stage. We'll do pre-patent academic spin-outs to big pharma phase 3 spin-outs like
Yep.
Crystallis.
Yep.
So we're pretty everything else agnostic. It's just got to be really important. That makes life interesting and fun. Japan has a lot of interesting opportunities, both in the more mature assets and in the early stage assets. So, frankly, we'd probably double the size of our team and be busy. But we do believe in startup ethos, and we're still a startup, so we kept the team lean and mean.
It's great. It's great. And can you speak to the innovation, coming out of Japan a little bit more? I mean, I know, obviously there's an opportunity there, and of course and today we've heard a lot about China, right? And that's everywhere, right? Publicly speaking, but Japan is also clearly a space that is has a lot of innovation in across the board. And so, can you speak to that a little?
Sure, I think that's interesting, and the compare and contrast with China is also interesting as well. If you look back the past few decades, Japan has a disproportionate number of first-in-class medicines that they brought to sort of blockbuster scale, whereas China tends to be sort of best-in-class, sort of fast followers, and that's served them very well, right? And unfortunately, due to some of the government support systems, like the 10-year plan that have ended there, the VC ecosystem in China has sort of really struggled in the past 5 years. Now, on the upside, at least for global investors, is the fruits of their labor, so to speak, are now ready for harvesting. So China's like a great place to go do licensing right now, as you've seen in the news ad nauseum. But the benefit to Japan is in terms of a place, a locale that has good seeds, that has a burgeoning venture ecosystem in terms of starting first in class and novel opportunities. I think Japan is like right place, right time, emerged as a replacement for China. And hopefully they don't screw it up. I see a lot of potential that the government and their initiatives are putting out there. And another wind beneath the wings is the US and the non-dilutive financing policy and research grants and all that sort of stuff changing. It all sort of adds fuel to the fire. Like not a week goes by these days that some US venture fund friend of mine will be like, hey, can you tell me about the AMED grant and how it works? And um, so I think, Japan's in a great place and hopefully they take advantage of it. Um, and sort of the caution here that I tell the government agencies that I work with is, uh, China had like massive government support for a long time, 10 years, and then they just fell off a cliff. So you need to have a better, I'd say the same thing to the Trump administration too. Don't make rapid changes to slow moving systems, right? Yeah. Let, if you're going to end it in 10 years, like 5 years out, say, hey, we're going to end this in 5 years, right? Um, but yeah, we'll see. Right now they're in the early stages. I think they're doing a good job. They're adjusting the policies on a quarterly basis. Like they've been really adaptable, and I think Japan's been doing a great job. So I'd see I have nothing but optimism about Japan's growth for the foreseeable future.
That's well said. Moving into more, hey, when you look at deals and look at entrepreneurs as a whole, right? When you back an entrepreneur, what qualities do you look for, and what qualities really matter to you?
Yeah, I mean, people matter the most, and um, when you're doing diligence on someone or a team, the teams that say, well, this is where we're weak, or this is where we're not sure, or this is where we need help, or if we tell them, hey, your development plan doesn't make sense, you really need to do a more robust phase two, and it's going to cost more. People who are upfront and understand their own weaknesses or who take feedback well, I think is the most important thing. Experience matters a lot. And I think we went into Japan and have gone into Japan and haven't changed our opinion that we don't expect sort of fully formed executive teams with any of our opportunities in Japan. So we go into the opportunity. Do we like the science? Do we like the scientists? And could we seed this and build a team around him or her? So I think the default is that we're not expecting a team to be there. That adds more work for us because we're having to sort of co-found the company in most cases. I mean, there's been a few companies that we're like interested in, but like recognize that the team that exists there is not capable, very capable from a drug development standpoint, but wouldn't be capable for fundraising in the US. And that makes it not a good fit for what we're trying to do.
Yeah, I see what you're saying there. It's well said. Are there any other drivers that you think about when you consider making an investment? And of course, you spoke about science a little bit, and also, I guess, the science underlying it, but also the team element. What other drivers are key?
I mean, I'd say there's a couple things. I mean, the ones that make you feel really good have some kind of development plan and a target product profile from wherever they are to like approval.
Yep.
And we may not agree with everything, but at least it's like a first draft of a book. And, our job is to be the editor, not the author, right? We would prefer to be the editor, not the author. And so when you give us a completed story, even if we don't like it, we can say, okay, let's start redlining this and, let's bring in some KOLs to work on this. We may not agree on the story, but we sort of understand that, hey, this is the destination, at least maybe. We rarely get those, even in the US, right? I would probably say like 10%, 15%, like it's really the top, usually repeat venture folks who come with plans that are complete. And really the conversation you want to be having is like, okay, let's edit this together. And I think it's like 1%. Like we almost never see a completed development plan that we think makes sense. Often there's no indication yet, right? So, um, it requires a lot of work. And I circle back to people. I think, people who are willing to work with us and take feedback, it'll work well, right? It means we have to put in the effort and commit the time to help them out. But, teams who are like, oh, no, we know this is the right indication. We're going to go after obesity and take on GLP-1 or something like that. We're like, yeah, good luck with that, right? So, and then on the, on the diligence front, I think Japan has in strength, and it's not 100%, but when we've gone out to do data recreation, data replication at third parties, we've struggled less with stuff in Japan, whereas I think other geographies, sometimes replicability is, I think Japan is batting a higher average in terms of being able to replicate their stuff. Overall, I think the science there, we found it pretty interesting because it's a very much like comply culture. Everyone
I
stands on
see.
the left side of the escalator and doesn't get out of line. But as it relates to research, like when we look more globally or in the US, there tends to be a bit more of a pack mentality, like, oh, in vivo CAR T is hot. So there's like a whole bunch of like labs doing in vivo CAR. And there's less of that in Japan. There's some, of course, but like we'll find docs who've been like working on, like Yamanaka was working on those factors for like a decade, like,
I see.
in a closet where it was like sort of like dogmatically trying to figure it out. And he got there. And I think there's many more of the gems like that of people who were like not willing to take no for an answer. And they're like just pound the pavement figuring it out. And so those are cool. So we found a few of those that like weren't well published. Like, could you have sustained those with grants in the US? Probably not, but like,
Especially in today's
hopefully,
environment.
yeah, especially in today's environment. But we really like sort of not following the pack and doing kind of esoteric stuff. I think Japan's got a bunch of those gems hiding.
Great. It's 70 year. It's great. And then what do you think about deal making as a whole, right? Think about financing, IPO, M&A, that kind of thing. Are there certain trends that are, in your opinion, are particularly worth paying attention to?
Nothing major. I mean, I think from an overall market standpoint, it's interesting that the big Japanese pharma tend not to acquire domestically. And I've asked some board members there, and like, well, we're publicly stated traded companies for the most part. Japanese stock market is mostly retail, and so even the retail investors don't believe the value of domestic assets as much as foreign assets. So like, well, why'd you pay 5 times more for that thing out of Boston than you could have paid for one out of Kyoto? And they're like, well, the stock market, the stock prices would have reacted better in the
Yeah,
stock
yeah.
market. So it's interesting. There's really sort of an endemic disposition in Japan about our assets may not be worth it as much, which is interesting for us. That creates an arbitrage opportunity, try and take advantage. So to kind of find the assets on the cheap in Japan and then grow them globally. But arbitrage doesn't matter unless you're successful, right? You still need to do the hard work to take it from wherever it is to be a success. So it's not a free lunch or anything. And there's still the investor unfamiliarity with Japan. Like, wait, where did this come from? And like, what's the time zone? And so we still have to handle all that sort of stuff, but we're trying to minimize all that stuff by being the bridge.
That's interesting. That's well said. It sounds like sort of the I'll call it the major players in the Japanese ecosystem, very much financially focused, right? And in other words, market and public company financial focus more so than, hey, can we um, you know invest into innovation that's right in our backyard? It sounds like.
Yeah. But we'll see how they change. It's changing there. It is changing. So as any investor would attest, the best opportunities is when there is volatility. So we're there at the right time, I think.
It's great. It's good to hear. And then finally, what's one signal that you watch that others might miss? I mean, you talked about, broadly the market signal and the ability to arbitrage, but is there any other signal that you watch that others might miss?
Yeah, I mean, so I'll start with the obvious ones. If companies based or related to Japan don't raise money, then it doesn't matter. But one of our portfolio companies that we syndicated with Arch called City Therapeutics did a $135 million A last year. And as far as we know, that's the largest biotech financing ever in the VC space in Japan. And that in that same quarter in the US, there were like 20 biotech $100 million financing. So kind of shows you what that gap is. But that's probably the first thing I'd be watching is how many sort of 100 million mega rounds start to come out of Japan. Talos was a 205, right? So now it's a spin out. So I mean, you can caveat all these wants, but caveats aside, the more these things mega rounds happen with a Japanese asset, Japanese teams, I think people will start paying attention that, hey, these are real blue chip investors putting in a lot of dollars. And so I'd look for more of those to happen, this year, next year. That'll be a good sign. And then really the key catalyst that I'm looking for is $1 billion exit. And I don't care if it's based in Japan or based in the US, but Japanese assets at the core of the company and $1 billion exit in a startup. And I think that'll really sort of throw the fire to the flames, add flames to the fire, or the fire, fuel the fire. And I think it'll really kickstart Japan. I think there's a lot of kindling there. There's a lot of effort. There's a lot of initiative. But what'll really make the global players pay attention is a $1 billion exit. And that's kind of like our first phase of the fund, so to speak, is we want to get to that first objective. And then, and that's hopefully the next 5 years, right? And then 5 to 10 years from now, I think the next phase of what we'd like to see is a domestically headquartered company. So where the team is mostly in Japan. It might be a U.S. executive team that's moving back and forth. I mean, Chris Webber, right? Like Takeda, and regardless of how you feel the company did, um, there's there's precedence for that, and we'd like to see that in the future too. Japan's a very comfortable place to live. The cost of really talented labor is actually a fraction of the cost of the Bay Area, Boston area. So next phase for us is we'd like to see a domestic company that goes public in the NASDAQ.
Yeah, that'd be exciting. Absolutely. Makes sense. And I know I was right. I mean, especially considering Crystallis. I mean, that's exciting news. So, I mean, how, especially your 100, I'll call it the $100 million plus club goes, right? There's hope. There's hope there. It sounds like.
Yeah.
Um, yeah, and congrats on Crystallis, by the way. Again, right? I mean, it's exciting news. Over $200 million Series A to advance next gen gout treatment. Well, great. Thanks, Ken. Really appreciate the time here, and as usual, we'll be in touch.
Sounds good to me. Appreciate the interest, and looking forward to listening to the podcast again.
Absolutely, sounds great.
Sounds good.